Welcome to the Wise Wolf Project. I am your host, Wise Wolf. It is Wednesday, August 25th, 2010, 6:30 p.m. Well, I found this article on talking about a whole host of things, but mainly about some dire things that may be coming to pass. Uh, and it's from Harvey Organ's blog spot. Now, for those of you who don't know, Harvey Organ is one of the gentlemen who presented to the CFTC about the silver manipulation he thought was going on. And so his point of view, if you listen to uh, that meeting back in spring of this year, you will see his point of view and hopefully understand what he's talking about. Well, in this blog today, he's speaking, he's referencing Jim Willie, a message or a letter that Jim Willie wrote to his following. And those of you who don't know who Jim Willie is, he has uh, a blog called Jackass, so you can Google that. And he's sort of an investigative journalist on the the markets, gold market, I guess in particular. So he's referencing this, and I'm going to read this. And the reason I brought this up was because silverfuturist mentioned this exact article. I sent him a copy of it, but he may have made the video before I sent it to him. And in his video today, which is called Big Silver Rally, he's talking about the devaluation of the dollar by 50%, and he's referencing this Harvey Organ blog. So I'm going to go through it and kind of give you my take on it. This is from Jim Willie, and Jim Willie says that he had a highly reliable source from the gold banking world and international consulting. And basically, this source told him in early 2008 that on the weekend of September 15th of 2008, there were going to be three great failures. Well, as that those failures turned out to be, as we know, Lehman Brothers, Fannie Mae, and AIG. And the source also said that the U.S. government, will devalue the dollar by 50% overnight, and that they will need approximately 11 days to do this, and that the best time to do it would be during the Christmas New Year time frame, and that they had tried to do this in 2005, 2006, but the Chinese said, and this was the essence of, or at least a portion of, the big silver rally by the silver futurist. And I just wanted to put my 2 cent in. I don't think that this is possible. This devaluation of the dollar by 50%. And let me say, for those of you who don't know what a devaluation is, it just means that your money's worth less, which means prices for things go up or seemingly go up because your money is less value. So that dollar um, that's in your wallet, purse, bank account, checking account, whatever, if they devalue it by 50%, that dollar is now worth 50%, 50 cent, I'm sorry. And so all your money's worth, the purchasing power has been cut in half. That's not a good thing. Not a good thing. And based on this article, they can do that in 11 days or less. So you really should understand what your government is into and why it's important that you stay on top of these things so that you can prepare yourself just in case. Now, I don't think they will do this. It's not likely because number one, if you go back to this article, it said that they had already tried this in 0506 because but the Chinese who are our creditors and can't afford to take a cut um, on their treasuries that they're holding, uh, they're going to say no. And while it is true that they have come down in their treasuries, I think they hold like 800 billion now when it was over a trillion. That's still a lot of cash. That's still a lot of money, and they do not want to have that cut by any means. Um, Now, one of the things that the Chinese are doing, they've been buying up, doing all deals with Russia. They bought a coal company in Australia. So they're putting these reserve dollars that they have, which would be heavily impacted should this devaluation happen, they're putting it to use in real things. Hint, hint. You should be doing that yourself if you're listening. Um, Second of all, uh, our very own banks, which are top dog here, as we know, are sitting on cash. That cash is in American dollars. As a matter of fact, the Fed's been giving it to them for virtually nothing, and they've been using that to purchase our U.S. Treasuries for profit. So why would they want to devalue their balance sheet, devalue their earnings by 50%? I don't think so. They would be screaming like mad. They would not they would not put up with that. In fact, the treasuries are basically a promise to pay in dollars. So if they're going to be paid back in dollars, and they're using this arbitrage spread of the rate in which they receive it and the rate in which they're using the treasury to pay it back and have that cut in half, there's no way. There's no way. They would not allow that. Plus, they are insiders and they would be cued into that. Now, so in that regard, I do not think a devaluation is possible unless as I said, they are insiders and they hedged their bets. Uh, that would be the only way. And if they were going to hedge their bets, they can't use it with other paper currencies because those paper currencies, like the Canadian loonie, the Australian dollar, the yen, yuan, what have you, those currencies are also backed by ta-da dollars. So that wouldn't help. The dollar is the reserve currency of the world, and therefore they would have to have something better than dollars. And the only thing I can think of at this point would be gold. And if you remember, uh, this has been happening. There have been many stories coming out that the LBMA, the London Bullion Bank, essentially is running out of gold. And in this article here, Harvey Organ article commentary, he's saying that the reason the Bank of International Settlements a few months ago, um, quote, leased their 380 tons of gold was in fact to bail out the bullion bank. Now, the bullion bank, that's your business. Uh, just like going to McDonald's, which is a burger joint, and they don't have any burgers, that you have a problem. So, in essence, the it was a bailout for the bullion bank, who's supposed to have bullion, but apparently people have been taking possession of it. And that dittos with our own COMEX here in America, where people have been taking physical possession of silver and gold. Now, the thing about it is, just referencing Harvey Organ's argument at the CFTC meeting earlier this spring, uh, you understand that the companies like J.P. Morgan and HSBC have been shorting that those metals more than the supply. There is supply of it, so they're essentially naked shorting it, and so which basically means they don't have it to short. Usually, if you short something, you have to have possession of it. Well, they don't have possession of the metals, which means that if they're going to hedge it, they have to come back into the physical market, into the open market, and buy it, which means that the price has to go up because people aren't going to want to sell it now. Oh, you're in trouble and you're a big guy? Oh, no. I want a higher premium. I want a higher cost for my gold, for my silver. So, and if you've noticed over the last 2 weeks, week and a half or so, especially today, gold and silver have been on rocket ships. Now, it is true that a lot of this is probably because of India, China, Russia, these major countries that are going to gold, uh, some sort of gold backing currency, something of that sort. But also within that, these banks are, if they know that there's going to be a devaluation, they're going to want to hedge it again, want to put a hedge against that, and and they will have to because they've been playing funny with the books. Um, they're going to have to go back into the open market and buy the gold themselves, much like the central banks have been doing, which is positive for both gold and silver, but specifically gold. So that's my take. I don't think it would happen and if unless happens, uh, we got much higher gold prices ahead, possibly silver as well. So that's my time. I hope you've learned something, and I hope that you're better for it. Have a great day. God bless.